on our workshop on automatic exchange of information. Welcome to you. I am Zubair Patel. I'm the head of tax and corporate services at KPMG in Kuwait. I think I would just want to welcome the specialist teams that we have on the AEOI on this workshop. So first of all, I think our UK special thanks to Rohini, Karsten, Hassan from the UK to give their time to join us on this workshop. And of course, we have got Fahim and Naveen from Kuwait, and as well as we've got obviously Philippe, who I'll be handing it to, and Mubin and Ali from Bahrain. You will have the contact details, of course, during and at the end of the workshop. So I think obviously if you do have any questions, feel free to contact them to follow up on the webinar for any specific queries. In addition, there is going to be a time for Q&A session. So do pick up any queries or any pertinent considerations. Just a quick word. I mean, obviously, I don't want to spend too much time because we've got such a lot of issues on the workshop. I would say in the workshop room, the whole region in the Middle East and GCC as well is changing fast. We talk about economic substance coming through. We talk about obviously VAT came in 2018. So the whole landscape is evolving. It's a whole concept of shifting sands in terms of tax. And this is really followed through with the automatic exchange of information. First came FATCA, then CRS, and now we've got reporting for banks. And I think technology is the need of the hour. And I think why? Because obviously the tax authorities are looking for data. They're collecting more and more data. And again, I think one of the means of doing that is going to be the AEOI, which is the automatic exchange of information. So I think with that, I'm going to hand it to my colleague Philippe, who's going to go through the agenda. So over to you, Philippe. Thanks.
Thank you so much, Zubair, and also on behalf of KPMG in Bahrain. I can see there's a lot of our friends, contacts, and partners that are online. The essence is actually the content, so I won't take too much time, just ensuring that we cover all this content going forward. So throughout, it will be our specialists, both in Bahrain, in Kuwait, and in the UK, that will be taking you through the agenda. The content is of importance. We are living in a fast moving world. Data quality is important at all possible levels, not just tax, but also around audit, internal audits, and overall. And yes, we are connected. Look at us here around this workshop, connected from across different countries. The authorities themselves are connected as well. So there is an importance around data quality, there is an importance around data safety, and there is an importance around that exchange of information to match indeed what's going on in the regulatory space. The question and answers, if I could ask kindly the audience to keep them either for the blog or the online questions. You can always get them and they will be monitored and then responded. But we will have indeed ample possibilities to answer all your questions live at the end of it. As I said, content matters. It is not me you want to listen to, it's our specialists in the 3 countries that are present here. So I'm handing over indeed to the first speaker to take us through the first agenda points.
Thank you very much indeed, Philippe and Zubair. Very much appreciate that you are hosting this event. So thank you to our colleagues in Bahrain and Kuwait. As you quite rightly say, we're very joined up. Thank you to everybody that will be that has actually dialed in for this event. As briefly mentioned, we've been invited over, the UK team that work on the automatic exchange of information, and I'm joined by other team members, Karsten Voigt, Lana McIntosh, Hassan Imran, and we couldn't have got organised without Sophie King. So I'm going to start off with taking you on a quick tour around the world on the automatic exchange of information to just cover the global trends. just moving on to the next slide. Okay, so actually, I just wanted to share this one slide with you because it actually provides a lot of information. The OECD issued this information on the 30th of June 2020, and you can see the numbers actually speak for themselves. At a very high level, there is a substantial increase from 2017 to 2019, with 97 countries carrying out automatic exchange of information, enabling authorities to obtain data on 84 million financial accounts held offshore by their residents, covering 10 trillion euros. Now, that is a huge jump from 2017. We understand that in 2020, this has increased to 7,000 exchange relationships. So the numbers continue to go up. And as you can imagine, these will continue to go up as more jurisdictions join and they develop their systems to look at the data closer, because this is very, very valuable information. So one of the key questions that we as a team are asked over and over again is, that's great, that's a lot of data that's being collected under the automatic exchange of information. However, what is being done with all of this data? What actions are actually being taken? And this is where it gives me the opportunity to cover several jurisdictions and their approach on the automatic exchange of information. Well, first and foremost, if we start off with the Global Forum's peer reviews, well, many jurisdictions have already been through a review and results have been published, but there is another round of reviews that have started this year. The next round of reviews actually is to establish that, okay, many jurisdictions are collecting data, exchanging data. However, have they implemented CRS effectively? And the results of that next review will be actually issued in 2021. So what does that actually mean? Effective implementation. It means, is there a true governance program in place to make sure that actually everything that's being done from a process and procedure point of view is in line with the regulations and is effective? So I'd like to start off with the Cayman Islands. Now, the Cayman Islands have taken steps forward to ensure that they have moved over from the blacklist, and they've actually introduced a requirement in addition to annual reporting. Financial institutions are required now to complete a CRS compliance form. But what does the CRS compliance form actually mean? The actual form is a requirement for information to be reported on non-reportable accounts as well as reportable accounts. So why is that being requested? Well, the reason that's been requested is actually they're requiring financial institutions to balance the book. Are your non-reportable accounts truly non-reportable, and have you actually reviewed them in detail? And are your reportable accounts truly reportable? So are you under or over reporting? In addition to that, the Cayman Islands, and they've said this for a while now, have clearly stated that all financial institutions must have written procedures in place. So that's a specific requirement by the Cayman Islands, and the first CRS compliance forms need to be submitted by the 31st of May 2021. Moving on to Luxembourg. Luxembourg, the Luxembourg Parliament passed a bill this year making CRS nil returns mandatory. So that's a slightly different approach to Cayman, and many countries are actually making nil returns mandatory. And the reason to have that as a mandatory requirement is to, again, ask the financial institution to look at what they are reporting or what they're not reporting. So it's an official statement to say we have nothing to report. What they've also done is they've actually increased their penalties. So for non-filing or late filing, the penalty is the US dollar equivalent of 12,000 US dollars. So they've increased that penalty, but they also have an existing penalty for non-compliance. where actually financial institutions are audited, and they are audited within a 10-year limit, which they confirmed again as they passed the bill. But the penalties could be up to $300,000 equivalent. So a slightly different approach with the Cayman Islands. I'm just going to skip over Sweden and Canada, which is quite interesting because Sweden and Canada have also introduced penalties, but these penalties are per form or per account. So if we look at Sweden, Sweden's penalty is the US dollar equivalent of $900 per account. So if you have 1,000 accounts, that could really impact your business because it's $900 per account. Just moving on to the next slide, and we're getting closer to home now. Let's have a quick look at Australia. The Australian tax authorities have issued questionnaires to financial institutions asking for more information. That's quite similar to the UK. The UK has done that as well. They've issued questionnaires. The UK have also introduced face-to-face meetings, discussions over calls with the reporting financial institutions as well. But the one thing that Australia has done differently to other jurisdictions is Australia have analysed the data to the point where the CRS statistics were actually presented to the Australian Parliament. So they're collecting the data, they're looking at the data in detail and actually saying, okay, so who are these overseas tax residents that actually have financial accounts with us? So they're looking at that in more detail. Back to the UK. The UK's approach has been a little bit more gentler. The penalties are a lot lower. They say the UK HMRC have definitely issued penalties, and actually it's the reputational risk more than anything else that's of a greater concern. Policies and procedures are reviewed, and to the point where HMRC have issued nudge letters to investors. So why are they actually issuing nudge letters? Well, they're encouraging investors to actually look at what they have put on their tax returns, and in fact, encouraging voluntary disclosures. So a slightly different approach with the UK from that side. I'm going to move on to the UAE. Now, the UAE have introduced a compliance form similar to Cayman, but they've been a lot more friendlier. They're still asking for additional information in addition to the reporting requirements. And again, it's non-reportable accounts and reportable accounts. With that, this year, they've actually introduced penalties as well. The penalties, as you can see there, are based on non-compliance with 20,000 dirhams or $5,000 equivalent for any person with any inaccurate or incorrect self-certification form. So the onus is not only on the investor, but also on the financial institution. If the financial institution has not collected the correct information, then again, there is a penalty per account. So let's now move back over to, let's bring it back home to Kuwait and Bahrain. So we're going to go into a lot more detail with regards to Kuwait and Bahrain, but just to mention a couple of points. Kuwait, it's mandatory for financial institutions to file FATCA and CRS certifications on an annual basis, as well as to appoint an auditor, which must be approved by the Ministry of Finance to review the financial institution's implementation. So, that is an already established requirement, but most importantly, and to note that a self-certification must be obtained before an account is opened. The same applies for Bahrain. You must obtain a self-certification form. Slight change with Bahrain from the Central Bank of Bahrain being responsible for AEOI. That has now moved over. And actually the most interesting point is that for AEOI, financial institutions are subject to a sensitive penalty as outlined in the CBB rulebook. So the fact is that all of these, if we look at all of these jurisdictions, there is a theme that seems to be actually evolving from this. And I'm going to just wrap that up in the next slide to show you how these themes are coming across globally. So you can see on the right-hand side, many jurisdictions have used the approach of penalties, introductions of audits, mandatory nil returns, the requirement for policies and procedures. So we're taking that round to the regimes. And it's not only about policies and procedures, we're also looking at documentations. For example, obtaining a self-certification form. And that is really key, because we've seen over and over again where we've helped clients on remediation exercise. It's not only been for pre-existing accounts, it's also been for new accounts where a self-certification form has not been obtained, which actually adds to the cost to the business for having to go back out to these investors, to these customers, to ask for more information. The scope of AEOI is broadening. We've seen that recently here in the UK, where products that were previously considered to be out of scope have been brought in scope. So it's definitely broadening, and definitions are changing as well, where financial institutions that were considered to be out of scope for automatic exchange of information are being brought in scope. But why have I gone round from penalties to regimes to broader scope? What is it that tax authorities are truly looking at? They're actually looking at the data that you are collecting. So what is the quality of the data, and how complete is that? And in most cases where tax authorities have enhanced their systems to look at this data, that triggers the question of why is it incomplete or why is it incorrect? And actually, this is where we would like to focus a little bit more on providing you with some more information. And I'm going to hand you over to Hassan Imran now, and he's going to be covering some insights into the importance of data validation and control.
Thanks, Ro. Over the next sort of 10 minutes, I'm going to be discussing the common pitfalls faced in CRS reporting. So I'm going to show you our KPMG application whereby the data is validated. So if you bear with me a minute, I'm just going to come off these slides and move on to our application. So you should be able to see on our screen now, which is the scorecard validation, which is step 2 in the normal process of our application. So we have 3 simple steps. Step 1 is to input the data. Step 2 is to validate the data. As you can see in step 3 is to generate the XML report. So as you can see here, the application has identified 2 errors and 4 warnings. And the way that this works is it compares the respective financial institution against the schema where it is placed. So it will check whether all mandatory fields have been completed, and it will also check the optional fields. So if, say, for example, a mandatory field is incorrect or missing, it will display an error, and it will also mean that you will not be able to generate an XML report either, so you won't be able to move onto stage 3 until all these errors have been rectified. And with the optional information, it is displayed as a warning. So I'm going to sort of just walk through some of the common sort of pitfalls that we see and how our application can help mitigate these. So I'll start off with the first error, which has been displayed by our application. As you can see, our account reference that's come up as red as an error. So if I hover over this, it is telling me this is a mandatory field. So as per this FI and the schema, this would be a mandatory field, and this would need to be populated before the XML could be generated. So if I insert a account reference number, which is typically just say the IBAN number of the account holder, and I select validate, hopefully this error should disappear. So as you can see, I'm left with 1 more error. So I'll move on to the next error. And as you can see here, this is saying that there's an error with the tax ID number, often referred as the TIN So the TIN is a key data point for tax authorities around the world, as it identifies exactly the account holder in question. So this account holder is from Guernsey based, GG here. So the Guernsey tax authority would be able to tell which exact account holder that has been reported back to them. So we have a really clever functionality with an application, which I get really excited about when I speak to clients about this. So it's the TIN validation engine. So as a minimum, the TIN validation engine looks at two things. It looks at the alphanumeric format of the TIN to ensure that the correct combination of letters and numbers has been reported. And if I hover over this, it's telling me that the expected format for this TIN is GY, 6 numbers and a letter. So for Guernsey, that would be the expected alphanumerical format. Number two, what it does, it looks at the checksum algorithm. So basically, what this does is it ensures that that a correct TIN has been a correct and valid TIN has been given by the account holder and it is valid. So the best way to explain this would be to provide an example. It's like when you enter your credit card online on a website, and it can usually tell you if it's valid or not. In the same way, our TIN validation engine and the checksum can identify whether a valid TIN has been given by the account holder. Although it will not identify precisely who the account holder is, but it will tell you this is a valid TIN. So as a minimum, the TIN validation engine does these two really clever checks, and a lot of clients find this really useful. So if I, for example, put in here a TIN, and hopefully this error should now disappear because it is in the correct format. As you can see, the errors have gone now, and I can generate the report. Another way you can sort of rectify this information is either on screen or within, you can export it onto Excel, and you can fix it with an Excel sheet. I can show you that later as well. But for now, I'm going to move on to the warnings and see what's been displayed here. So as you can see here in the individuals, if I come over to this, it's saying the tax ID country is not in a CRS jurisdiction. So basically, we see this quite commonly. Just say, for example, you have account holders in Kuwait or Bahrain, and for example, this country here, Bangladesh, may not be part of the CRS list. Then there's no need to report these account holders. And what we've seen is, just say, for example, this country was to sign up a few years later, and you have been reporting this account holder to the tax authorities. They may exchange the previous 3 or 4 years data of that client to the tax authorities, and normally that as you can imagine does not go down well with clients. So this is basically sort of a high level overview of what our application does. It runs hundreds of validation rules and logic checks. So for example, one of the logic checks that it does is if you have entered a passive account, it checks that it has an actual controlling person for that account. And also it does lots of other sort of functionalities as well. But what I'm going to show you now is the actual exported scorecard. So as you can see here, we have the data has been exported to scorecard, and it's highlighted red here, so it corresponds to the application to say that for this TIN that the checksum has failed. So you can, like I said, rectify the data on screen or within the Excel, and also provides a detailed summary of all the different errors and warnings that have appeared within your data. And if you click on them, it can take you straight to the exact cell that needs to be fixed. So it depends entirely on the user on how they would like to do this, but clients find this really useful. What I'm going to show you next is the application has an inbuilt audit trail. So this is really powerful and useful. as it identifies what information has been changed and by whom. So if I opened up the detailed audit trail, it will identify what information has been changed, by which user, and the date as well. So as part of a sort of good governance process, an audit trail is vital, and our application has this. In addition, what we have, what else we have in the application is a data health check module. So a data health check module is essentially allows you to input data into the tool prior to reporting. So just say, for example, you have a May reporting deadline, and you come to January and you've got 90% of your data available. You'll be able to input the data into the data health check module, and basically validate any sort of data issues early on and sort of rectify them. So this data health check module can also form a part of your governance control. And now I'm going to pass back over to Ro to speak more about the AEOI health check and the risk framework. Thank you very much.
Fantastic. Thank you, Hassan. Really appreciate that. Okay, so that's a really key point to pick up on, because as financial institutions, you've worked exceptionally hard to implement the FATCA and CRS requirements. The rules keep changing. We keep getting additional requirements. So you have to keep on top of the rules, but also with your processes that you've embedded within your business. It is really key to ensure that any gaps that appear are closed quickly. And I mentioned earlier on that even to the point, something as straightforward as collecting a self-certification form at onboarding, all it takes is for there to be a change in staff and a change in process. For example, the growth of the business with new products being introduced, that could cause for gaps to appear within a process that's already been established within your business. So as Hassan covered just earlier, there are two different types of health checks. So one being the data validation, and we know that the data validation point is important because that is what the tax authorities are actually looking at. They're building up their systems, they're enhancing their systems to collect all of this data now more than ever, because they really need to find those that actually owe them money, that they haven't actually declared that they have funds actually held overseas. So the data validation is key. But the other thing that's key as well, and a different type of health check, is to actually look at processes, policies, and procedures. Policies and procedures are written, but are they truly maintained? Are they in line with what the processes are? So the daily activity that's going on. Systems are enhanced. So are your documents actually updated in line with the enhancements that you put in place for systems? Your communications are a number of things: internal communications and external communications. Your internal communications is making sure there's awareness and accountability within your business. So is there an overview training required, or is detailed training required for specific requirements? So collecting a self-certification form and validating that self-certification form are two different things. So because you are actually checking that form in line with other documents. So is there anything that causes for a cure to be required? We've covered schemas, we've covered regulations, but actually if we look at the piece of the puzzle, by ensuring that you have all your gaps identified and you're taking actions on those gaps, you're actually reducing the impact on your business. And when I say business, I mean customers, investors, and the business as a whole internally. So there are two different types of health checks. we actually more often than not will see a health check as a one-off exercise. So let's find where the issues are, let's close those issues, and then move on and make sure that we maintain them by having a good governance program in place. Health checks are sometimes required in addition when there are acquisitions, mergers. We want to see all the positives where there's been some substantial growth within the business. And so a health check would come in handy then as well, just to realign and to identify if there's any gaps. Once a health check has been actually completed, you really don't want it to go to waste. And by making sure that you have a good governance program, and I'll just take it to the next slide, is key. So actually, if we look at all the components within the governance, within a good governance structure, you can see the most important thing is the golden source of data. If we look at all of the other components and we put them together, in fact, on the right-hand side, what does it result in? It enhances your customer's experience. You have better data. Better data is not just for FATCA and CRS purposes. You require better data anyway for AML, KYC requirements. You can future-proof your systems so that you can grow your business, and actually it costs you less to continue to enhance all of these requirements. But more often than not, for those that are actually signing off that they are within the business compliant with FATCA and CRS, you have a good process in place to manage your risks going forward as well. Based on what I've just covered, I'd like to hand you over now to Alana within our team, who's going to cover this in a bit more detail and just show you some of the features that we have within a solution that we've developed for our clients, that they can use this on a day-to-day basis.
Thank you, Ro. I'm going to take 10 minutes or so just to go over how we put into practice the risk framework. So that's the governance processes behind the reporting, behind the data collection that help support the data reporting and collection. As you're aware, if you have a team that is dealing with all your collection and your reporting for AEOI, there is a risk of self-review there. When they implement a framework where they can look at their controls and look at the processes around the AEOI structure, there is that risk that it will be the same team that covers the controls that are performed. We've managed to build a framework into an automated system which sets up scheduled controls with a workflow behind it, which allows for email notifications and also for reminders that can be set out for anyone that is due to complete any controls. This allows for KPMG to insert some preloaded controls to give a baseline for a client to be able to look at these controls in place, but it also allows them to scale these up and to build their own library of controls for any structure that they may have within the financial institution. As you can see, this is built in Azure Cloud, but we have a functionality within here to be able to upload any data, so it sits behind a customer's firewall, and that allows that there's no problems with any sharing of data across to a cloud environment. I'm just going to take you quickly through this section here is the reports. This gives a general overview of how your AEOI controls process is being handled. As you can see here, you can split this into countries, so you can see by country or by jurisdiction how the controls process is going. As you can see here, there's 7 overdue for Hong Kong, 3 were completed after the due date, and 7 were completed on time. When you look at these reports, you can, depending on your role, you can look at by control or description, by country as we just saw, or you can change it to business unit, or however the data is better for you to understand. these are all role-based systems as well. So these can be segregated by each person's role. So a head of finance might not want to log in here all the time to check all this information, but someone in compliance might want to, or someone in the AEOI team might need to have a look to see how their controls process is being undertaken. We can break these down and drill down into each of the jurisdictions as we had seen before. So for Hong Kong and Singapore and the UK, as you can see, we've broken the AEOI process down into new accounts, pre-existing accounts, registration and classification, and AEOI reporting. The AEOI reporting, as you know, will come at the end of this process, and this is really as a backup and a support to the reporting process. As Hassan had talked about the data health check module on the AEOI reporting tool, you could build that module into your controls to say that every quarter or every month you must load in your data and check it over to check the checksums and also the TIN formats to make sure that you're going to report good quality data when it comes to the reporting period. I'm just going to drill into one of the one of the controls. And if we go down to reporting, we can see that we can build these up quite quickly. So if there are any controls that have been implemented by the financial institution themselves, you can pop these in. KPMG can help to support this, and we can build them in for you and set them up so that they're ready to be completed by the responsible reviewer. As you can see here, we've based these controls on the rules provided by the OECD, and we've tried to make them as easy to understand as possible in case it might be someone not tax-based that has to perform these controls. So you can see here for general reporting, reportable information, we've just highlighted the checklist that needs to be of the information that needs to be reported. And it gives the reviewer a chance to take a sample of the accounts that are to be reported and to just check through the information that they have and that they are going to report. We can set up each of the controls with various different ways to report the outcomes. So as you can see here, we have a checklist, and down here we have a table, but we also have the functionality to, if you wanted to do it in Excel or outside of the system, you can then upload your evidence and show that you have done the checks and it's ready to be reported. So this one has been completed already. So I'll just take you in to one of the ones that are waiting. So this control is something that we always come across because there are always going to be US TINs missing. It's just one of those things when you come to reporting. So as you can see here, it goes through the rules, gives a general background of what it is that you're looking for. You can then tag this to business units, the countries, and your work streams, and that allows for you to do the reporting on the previous dashboard so you can see your status. As you go through here, this one has got test results in a table. So you would fill out your tables, your account number, and then the TIN, and any notes that you have about that account. You can also pop in radio buttons, which allows for easy reporting of yes/no questions or simple questions that are static. So we can say, yes, this is passed, and this will allow me to say and submit to the reviewer. What we will see is, if I just go to home, I will show you how we build these controls up, and it really is easy to scale up so that any controls can be added in at any point. So just a general title. This could be done for not even just for AEOI, it could be any of your other processes in the bank as well, and they can then be tagged with it could be a finance problem, it could be training problems. So if it's if you have made a control requirement that you want to give everybody AEOI training once a year, you could pop this in here and remind the reviewer that they have to complete their AEOI training, and then someone will have to sign off on that. And that could be put down as one of your processes and procedures. So I'll pop in a couple of tags, and that means that we can then report on these afterwards. We can schedule these controls and tests to be done. So if it's just a one-off, you can set it as a manual test, and it just reminds someone, it sends a notification, asks them to complete this control, and then they complete it and have it to sign off, and it is finished. Or you can schedule it to be a recurring control. This means that the notification will come depending on the interval. So if it's a monthly control, we can set that the notification comes 10 days before it's due, and you can schedule it for all periods, and it will continue every period that you have set it for. So every month it will send a notification to the person responsible. So I'll put myself in here, and then you can also set that it's enforced segregation of duties. That means that if I complete this control, I am not allowed to sign off on it. It has to go to somebody else for a second review, which again builds into the audit trail that you have got your processes in place and you do have controls in place. I'm going to set Rohini up in here. Apologies, Rohini, you're going to get more emails. And then, as we talked about before, you can set up the different ways that you collect the information on these controls. So if it's just a simple radio button with yes, no answers, you can quickly set that up and have it sent out to your reviewers. You also have the ability to attach files, and this will take any file format, as long as it's a structured file format. As we saw before as well, checklists, and you can make these to whatever kind of information that you want to be able to report on. You can make some of these required as well, so that if you have somebody that is performing the control, you can make it a requirement that they have to answer that question. So they cannot send a submission without answering this question. And that again builds into your overall controls and your processes behind the governance. As you can see here, we've built this for AEOI, but I mean we've started building other regimes into this. So if there's any local reporting requirements or any personal requirements from a head office, these can really quickly be scaled up and popped in to the system. I'll just go back to the reports, and this will make a little bit more sense now, where you can see the different tags, and then because we've added tags onto different controls, you can then report on these and show how your AEOI governance procedures are coming along. I mean, it means that you'll always have trained and knowledgeable staff to avoid any impact when it comes to showing the audit trail that you have a governance process in place. Thank you very much. I'm just going to stop there because I know that we're pushed for time at the moment. I'll take any questions at the end. At the moment, I'm going to hand over to Ali to give a bit more of information on what's going on around Bahrain.
Sorry, apologies, I was still on mute. So actually, what we're going to do is have a quick overview of where we are in Bahrain in terms of the regime and who is responsible in Bahrain. So I think we go on to the next slide. As you know, Bahrain was one of the first countries in the region to adopt and come on board to the FATCA regime. Albeit at the time, Bahrain had agreed the IEA the intergovernmental agreement in substance, and it took a while for that to be signed up between Bahrain and the US. And once that Model 1 was introduced around about early 2017, within a few months from that, the Multilateral Convention for CRS was also signed, and Bahrain rolled out those sets of AEOI reporting. Now, initially, AEOI was handled predominantly by the Central Bank of Bahrain for the regulated entities and by the Ministry of Industry and Commerce for the non-regulated. I mean, there's not too many non-regulated, but for those that are there, the MOICT is in charge of collating the reportable data. The overall responsibility was then shifted to the Ministry of Finance, and with the recent introduction of VAT in Bahrain, the same department that was in the Ministry of Finance is now shifted to the tax authority, which is the National Bureau for Revenue in Bahrain. In terms of reporting deadlines, generally the 2nd of May is the annual reporting deadline for FATCA and CRS in Bahrain. Even this year was sort of a unique year due to COVID. That deadline was shifted to 30 June of this year. There is no word at the moment if there will be any change to next year's deadline, so we assume by default it will shift back to the 2nd of May for next year. Now, what we're also going to look at is the mode of submission to the central bank. So if for those that may have been working with FATCA from the very beginning and CRS from the beginning in Bahrain, initially it was really an Excel file submission through email, but the central bank has developed an online portal where there are 2 modes of submission. So the first mode of submission is using basically the schemas that have been outlined by the IRS and the OECD, where you can convert your data into the XML format and upload that onto the CBB portal, and then that will go through the tools that the CBB has to collate all of that data and provide it to the competent authority. The other mode of submission is basically a manual entry, and if we look at the next, you just have a look at what sort of manual submission. It's basically more or less the reportable data where you manually need to go in and key. And I think what we've seen is some of the larger FIs in the market, especially in relation to CRS, there is quite a number of reportable accounts. It's not very feasible to really go in and manually enter all of that data. So FIs have been looking at automating to an extent how to convert that data into XML format just to save time and to ensure the accuracy of the data that goes in. So overall, I think since 2017, there hasn't really been much change. There has been talks by the Central Bank and the MOICT and the MOF that the feedback they were getting from the IRS or the OECD, that there is areas of improvement, quality of data that they were receiving, and I think generally there has been talk of an audit externally by the central bank on the submission to the FIs and talking to the FIs about their submission, but we haven't seen anything as of yet in that regard. So I think moving on to the final slide on Bahrain. While unlike some of the other regional Saudi and UAE, for example, they have specific local rules in relation to non-compliance for FATCA and CRS. I think the way the CBB looks at it, it generally covered in their overall rulebook, and I haven't seen any penalties for non-compliance in any way at the moment, but again, further scrutiny coming in from the authorities outside of the country may result in CBB coming in to talk to FIs and potentially there being penalties for non-compliance. I think a final note for me, I think what I've seen also in practice from the market is since it's been there for a couple of years with no changes locally, and especially the high turnover in retail banks more specifically, there are still areas of improvement with data collection and reviewing data, and I think the understanding of either frontline employees or even within compliance, when there's a turnover, I think the basic foundations are there, but there is room to expand on that base and ensure further compliance. That covers us for the Bahrain update. I hand over to Fahim and Naveed from Kuwait, who will take us through some of the updates from Kuwait as well.
No, that was great, and obviously there's been a lot of information in the past hour or so. So please, I would say everybody, any questions, put them in the chat box. We have time after we cover the update on Kuwait. We'll spend some time addressing some of the questions that you share with us, and then we'll wrap up after that. So, when we look at Kuwait, we're going to just cover some of the compliance obligations, and then also some of the challenges that we've seen with Ministry of Finance and working with our clients in this space. So if you go to the first slide, which provides a good summary and comparison between the FATCA and CRS regimes here. The FATCA, obviously, it was effective in 2015 under Model 1 IGA, but on top of the framework, IGA framework, we had local regulations issued and implemented so that it allows financial institutions to report the data to the Ministry of Finance. We have an annual reporting deadline of 30th of August. And the reporting is actually in twofold, and we touched upon this in one of the earlier slides that Rahim was saying. The first is through the AEOI portal, and that's the reportable accounts data. In addition to that, there's these FATCA certification reports that have to go in, and they are signed by an independent audit firm and pre-approved by the Ministry of Finance. And that has to be done in hard copies physically at the Ministry of Finance. This year, there were certain exemptions because of the COVID situation. But previously, it had been a hard copy submission, the FATCA certification reports. And the reports cover, largely three areas. One is the validation of the entity classifications and the registrations of the entity. Secondly, they look at the actually reportable accounts and specifically, the robustness and the integrity of the data that's going in, whether the mandatory fields have been completed appropriately, the data within those fields, are they correctly formatted in line with the requirements of the portal? And thirdly, on the whole overall compliance aspect within FATCA CRS regime, so they look at the robustness of the documentation, the certification forms, etc. Policies and procedures are in place and are reviewed by the board, approved by the board, and being updated as and when required. They also look at responsible individuals being assigned appropriately within the organization. So all of that is then certified by an independent auditor on top of the account data that goes in. And similarly, when we look at CRS, that was in 2017 here effective. And again, we had some local legislation to implement those to allow financial institutions to report the data to the Ministry of Finance. The added complication here in Kuwait is that we've got three different deadlines. One, like I said, for FATCA, 30th of August, but for CRS, 31st of May. So we have two deadlines to manage. And again, similarly with FATCA and then with CRS, we have a dual reporting for one of the electronic submissions to the portal, and then the hard copy certification that goes on to the Ministry of Finance. Currently, according to the Ministry of Finance listing of 67 reportable jurisdictions, and similar to Bahrain, the portal allows for manual entry, but again, we only see that in limited cases where we've got low number of reported accounts and the data is very limited, even if it's in nil reporting, that may be applicable. But typically we have XML files upload, which would be the ideal ways. And again, similar to Bahrain that we just heard, is that currently there's no penalty for non-submission and late submission in the portals. And this links in well to the next slide, where the local legislation is very brief. Hassan, if you have the next slide, that'd be great. And the local legislation is very brief, and so if you have uncertainty on transactions and reportable items, we're really referring back to the OECD guidance on that. There is a small team within the Ministry of Finance dealing with this in terms for AEOI, and we can, under normal circumstances, go and discuss matters with them. But as with any other, tax and methodology with the Ministry of Finance here, there is no real practice of issuing formal clarifications or advanced rulings. So it's difficult to get any concrete information, and so you can have discussions, take a position, and then if the they come back, then you will have a discussion with them at that point. And the other item that we saw in the past was that there was some mismatch of jurisdiction, local jurisdiction on the website compared to what we've been available in the portal. That has been resolved, and I think for 2020 that's now running smoothly. Although some of the updates for the portal will be fairly close to the deadline. So then again, it's just the submission we manage them efficiently. Also, I'll hand over to Naveen now, who can go over some of the experiences we've had with some of the clients and financial institutions that we've worked with. So Naveen, if you could take the last slide, and then we'll head on to questions.
Yeah, sure. Thank you, Fahim. Hi, good afternoon all. So the challenge is what we normally see from the financial institute. Like obviously, the key idea for the AEOI is to collect the right data or the good data, to process it, validate it, and then to report to the Ministry of Finance on the portal. For the collection of data, normally what we've seen is that the KYC document, which is received from the account holder, at times is not complete. So it is not reviewed at times by the onboarding team, and that's where the lapses are seen, and that's what makes the financial institutes to, the collection of data at times is not complete from that side. In terms of processing, what we've seen is we see a lot of companies, small to mid-size, they use manual database, maybe Excel or other database. That's why we see that the database, what they have, they may not completely, take into consideration all the required fields which are required to be reported, or there is no validation check which is available. And normally we see that the companies, they don't do a continuous check. So these manual database which they keep, they normally extract the data at the year end and they do the reporting. And that's where we see that the validation errors are at times coming in. After that, the manual submission, we see that while the companies may have a softwares with them, but those softwares we see normally they're not updated on real-time basis, because the jurisdictions keep on adding for the reporting purposes. Even the fields which they keep on changing, Ministry of Finance, at times some fields are becoming mandatory. If these are not taken into consideration by those softwares, the validation errors come in. We see that the companies at times are not doing a continuous review of their data. So health checks are not done through softwares or their internal systems. Some softwares we see that they may not have a data protection. I mean, not always, but in some cases, so they may have data protection issues. So in terms of the data collection and that processing, and at the end, if the data is not validated properly, we see that sometimes the Ministry of Finance may get some queries which are required to be notified again back to the IRS or to the relevant jurisdiction. So and at times we have to also put some reservation on the report what we are required to issue. So these are some of the challenges we see in collection to process and reporting. Thank you.
Thank you very much, Naveen. Some very interesting issues there. raised by you, but my ears also pricked up during the other presenters' demonstrations. So I will go back to a few points. This is now the section where you will have an opportunity to submit some questions in the Q&A panel if you like. But we also had some questions already submitted, and there are some issues which we know are pitfalls and commonly asked. So let's kick off with one of the points that Naveen has just mentioned. So Naveen mentioned that there are challenges with locally developed software, and that these sometimes get exposed, particular issues around data security and data quality. Those are things that we really see a lot around the globe. And one of the questions that's been submitted to us hits on just that point. And this might be one for you, Hassan, so please get your microphone ready. What other steps can I take to improve the data quality?
Sure. So absolutely, Carsten, great question. So as I showed earlier, the data health check module is ideal. It gives an opportunity to identify and flag sort of any data integrity issues early on before the reporting cycle. So if there is any sort of major issues within the data that will be reported, that can be identified and remediated before the sort of reporting cycle kicks in. And obviously the application is great. It's got the hundreds of different rules, validations, logic checks. The TIN validation engine, I think, is really powerful as well. So definitely the application can help improve the quality of the data, so you don't have these hurdles when it comes to reporting.
Yeah, that's a good point. And Hassan, I think you also have some other tools in your repertoire, data cleansing, wrangling tools, I think commonly referred to, where you've helped some clients clean their data before it even goes into your application.
Yep, absolutely. So there's a commonly available tools such as ETL tools, so extract, transform, and load tools, whereby we've supplied the data mapping. So the more sort of larger volumes of data, they're stored in different data sources, and we're able to extract those different pieces of information into a sort of PSV, CSV format, which our application can bring into and ingest and validate the data that way. So we can definitely sort of look to automate the process and ensure that the relevant sort of data fields are being looked at and all the sort of mandatory fields are there. So when it comes to validating the data, that obviously if all the mandatory fields there, then you'll be able to generate the XML, and you should have no problem submitting that to the tax authority. So yeah, we've helped a lot of clients all the way sort of through the process from sort of the initial data right through to the reporting with the tax authorities.
Yeah. Okay, thank you. So another question has been around what are the tax authorities doing? Fahim, you mentioned that the Kuwait tax authority has got quite a small team of AEOI specialists, so I expect they'll be using technology quite a lot to scrutinize the data. And Ali mentioned that he hasn't seen any penalties yet, but the questions that's come up here is, are any penalties being issued? Have we seen any inquiries into data that's been submitted elsewhere? So that is perhaps one for the three presenters, Rohini, Fahim, and Ali. Take it in turns, please. Rohini.
Sure. Okay. Have we seen penalties being issued? We certainly have here in the UK. The penalties, as I mentioned, are really small in the UK. £3,000 it's not a huge penalty, but the reputational risk is a bigger penalty, I think, than anything else. you really don't want the local tax authorities coming and looking at all your data and all your documentation. So really getting that data, as Hassan said earlier on, getting that data correct, getting it validated is really key in all of this. I mean, the penalties are lower in the UK, but we've also seen where HMRC have worked closely with financial institutions, even to a period of up to 18 months. So they've identified issues, they've worked with the financial institution to help them to rectify this. And that's what most tax authorities actually want to do. They want to help the financial institution to rectify it. But if they actually aren't moving forward, then of course penalties do need to be issued, because you don't want those reoccurring problems happening. The penalties in Luxembourg are higher. We've helped some financial institutions in Luxembourg as well. Those ones are big, 250,000 euros is a lot of money. We've seen letters issued where nil returns haven't been done, where previous returns have been done, and then subsequently nil returns haven't been done, where the penalty notices have gone out to say you have until X date to finalise this, otherwise we will issue the penalty. And we've seen that there as well. I would like to add just one other point as well while I'm talking about the data. Hassan covered the data in quite a lot of detail, but we've got to remember that, when you're doing data validation, it also helps the fact that actually the TIN validation that Hassan covered earlier on, that is going to be something of the future, where financial institutions are certainly catching up on name and TIN validation being the true key, the true source of information to identify an individual or an entity. I think that is coming, especially with self-certification forms having to be accurate and complete. So let's see the direction of travel with penalties, and where financial institutions become more up to date with validating that kind of information.
Yeah. Thank you, Rose.
So
Okay.
I think from a Kuwait perspective, currently, whilst the law doesn't provide for penalties for incorrect data or late submission, I think it wouldn't be too far a stretch to see that change at some point in the future. As you said, governments are evolving. The practices around this area are evolving. And to ensure compliance, I think there has to, from a regulatory perspective, has to be some area of, I guess, for lack of a better word, stick to kind of force companies to provide the right data. We know of instances where Ministry of Finance has asked for resubmissions if certain fields have been incorrectly inputted. But as far as audits go, currently it's not really, there hasn't been much of a trend. But again, it's about how they use the data, how they're analyzing it, having seen the data trend over the last couple of years, and then looking forward to see, okay, if they see any anomalies or significant variances, then any tax authority are bound to ask some questions. And I think the important part of Kuwait, okay, there's no personal income tax there, but it's the income of residents and nationals that is being kept outside of Kuwait, which is, I think, the bigger question. So I think that it's a natural evolving point, and when we had discussions with the Ministry of Finance, it's something that they have alluded to, but it will have to wait for a change in law for the penalties to really get applied.
I see. Yeah. That's interesting, Frank. You mentioned it's more about the non-residents that are being reported, and then we've heard from Rohini how HMRC is receiving that information and they're comparing it to my income tax return and are sending me nudge letters, which is never a nice place to be in when you receive a letter from the tax authority. Yeah, definitely. I see Ali is back as well. So conscious of the time, but we do have a question on the future, Rohini, perhaps. So you've mentioned that the Cayman tax authority is sort of leading the way. They're really scrutinizing not just the data that's being reported to them, but also why didn't I report the others? And the question that we've got here is, what will other tax authorities do? Will they follow this idea? Is there a trend?
Yeah, I mean, we've seen that with Cayman. The CRS compliance form deadline was for this year, but it was back while they developed their portal. a lot of time and money has gone into developing that because they want to get the data absolutely right. So balancing that book of reportable and non-reportable, the UAE, they've done a much nicer, much simpler form to complete. It's not as detailed, but they're capturing the same information, reportable and non-reportable accounts. The other slightly different approach, but the themes that I covered earlier, is the mandatory nil return. Again, that is forcing financial institutions to look at their book very clearly and say, you know, we're not just going, okay, put that in the reportable and put the others in the non-reportable. It's saying, look at your accounts closely. And it's the build-up of everything, the self-certification forms, validating that information really clearly so that the financial institution really knows that they're not over-reporting. That's a key piece in all of this as well. Tax authorities don't want data that's not relevant. They want data that's absolutely relevant. So I see the direction of travel with more countries doing this very similar approach as well.
Yeah. And you touched on a very good point there. I think we've seen in the US where some global banks have first been challenged on their FATCA and CRS reporting, and then it's led to looking into their AML procedures. So if the tax authority gets wind that your procedures aren't in good shape, then you can prepare yourself for more questions, I guess.
Absolutely, Carsten. And I think that the other thing is that things have slowed down a little bit this year because of the current situation that we are in. That doesn't mean the tax authorities have forgotten. This data is really valuable. So as life starts becoming back to normal, for hopefully from next year, then we'll see all of that picking up as well.
Yep. Okay. So I think we have just about enough time for one other question that occurred to me at least. Hassan presented the data health check, which obviously is a useful tool. And this is a question for Alana and Rohini, perhaps. Would it be feasible, it just occurred to me, could you build that into your control framework, the data health check?
Alana?
Yeah, of course it would be up to the financial institution on how often they wanted to take this control on board, but it does give them the capability of controlling their own processes, and it shows that they are putting the input in to control their processes. It allows them to tailor their testing around any of this information, especially on the TIN validation, and it also means that the solution can be managed by an internal team in the FI, and it means that the process of completing these controls and tests, it means that this knowledge is shared around their business, and it eventually will upskill their teams.
Yeah, so that makes sense. Okay, so all of the materials that you've seen today will of course be made available to you, and probably also the recording, I imagine. And if you have any other questions for us afterwards, or would like to speak to one of the panelists, then please let us know. For now, thank you from me, and I will hand over to our hosts, Zubair and Philippe, for the final word.
Well, thanks everyone. Thanks to the UK team, and thanks to the Kuwait and Bahrain team for taking part. I think it was really interesting to hear about, and the focus on the transparency and how the Ministry of Finance in each and every jurisdictions are now taking action, making sure obtaining data, which, as I think Rohini pointed out, could be utilized in a variety of ways. So I think I would encourage all the participants. I mean, if you have any questions, the contact details of our the participants will be available. People who presented. So I think do ask those questions. And the recommendation to clients, I mean, if you have any concerns in terms of your report clients, I think please do seek tax assistance and support. I think the message is quite clear. I think we do need the technology, not just for, I mean, obviously this is, I think the whole tax landscape is changing, and the AEOI is part of that. And I think we have the team in the region. So I think the banks here I would encourage them to at least speak to their tax consultants, and we are here, speak to us as well if you've got any questions or any queries on your current reportings. We'll be happy to help. So I think a big thank you to everyone for joining in, and I'm sure that the discussions will continue on what we have discussed today. So I think, Philip, if you have got anything to add, if you're there.
I am still here, Zubair. Nothing more to add, just the fact that me being a lawyer, and I'm pretty sure there's a couple of lawyers, there's a lot of questions and a lot of things that passed my mind, but I guess that's for another time that we do that one. So thanks a lot to everyone. I hope it brought you something. It's been an extensive 1.5 hours almost, but I did find it very worth of my time, and I'm sure everybody found it. So thanks a lot, and off you go for the afternoon. Thanks so much.
All right, bye-bye.
Thank you.
Thank you.
Thanks all.